Mr. President, I rise this morning to try and set the record straight, if I can, on some of the rhetoric that I've heard in the last 24 hours or so regarding when it comes to the financial reform efforts that I've been engaged in along with my colleagues on the Senate Banking Committee for the past 38 months. I became chairman of the Banking Committee in January of 2007, about 39 months ago. And since that time, of course, we've held countless hearings and meetings to deal with the financial crisis, beginning in January and February of 2007. In fact, the very first hearings we held were on the foreclosure crisis in the nation and tried to get the attention of the previous administration, Secretary Paulson and others, to pay attention to the question that was emerging that our economy was collapsing and that too many people were losing their homes, that an economic catastrophe was looming, and frankly, there was not the kind of attention paid initially to this issue by the previous administration. But nonetheless, we worked forward. And so today we find ourselves on the brink of making an effort to deal with this problem. But listening to some of the rhetoric of the last 24 hours, I'd wonder if we've been in not only in the same chamber, in the same city, but on the same planet when it comes to the efforts that have been made to try and reach a bipartisan agreement to deal with financial reform. And I have almost unlimited patience, as many of my colleagues know. But that unlimited patience is being tested by some of the comments I've heard, and so I felt incumbent to respond this morning to some of these accusations about the effort being made to achieve a proposal on financial reform that might attract broad support in this chamber, unlike other efforts that have been made over the past several years. As I've said repeatedly during the many months we've been working, Mr. President, on this important legislation, these are complex issues. We've gone through the most serious financial crisis since the Great Depression. That's how serious this is. To hear the words of our financial leaders in this country and elsewhere, we were on the brink of a meltdown of the entire financial system of this country. And we came perilously close to having that occur. And for those 7 million who lost their homes, or the 8.5 million who've lost their jobs, it might as well have been a financial meltdown. Not to mention the retirement incomes that evaporated, and of course the loss of confidence in our future, along with health care and a variety of other things that have happened to working families in this country. However, Mr. President, that debate, as critical as it is on these complex matters that make up the structure and the architecture of our financial system, it is critical to the future of our economy and the livelihoods of millions of middle-class Americans across this nation, that debate should not be sullied by misinformation or derailed by those who would try and make it just another partisan game. Playing politics with this issue is dangerous indeed. Unfortunately, the talking points deployed by the Wall Street lobbyists in an effort to protect the status quo leave my constituents and many Americans vulnerable to yet another economic crisis. Those arguments are littered, they've made with falsehoods, outright falsehoods, that I regret to say are now being repeated by people who should know better and, frankly, do know better. So today and this morning, Mr. President, I want to set the record straight. And I want to start by tackling rather one of the wildest and, frankly, most dishonest objections to this legislation, which is the notion that it is somehow a partisan document. I consider the minority leader and the ranking member of the Banking Committee to be good friends. They're patriots with whom I've worked over many, many years on many issues. Senator Shelby and I have been working together for over a year on these issues, and I cannot for the life of me understand how anyone could claim with a straight face that what I've tried to achieve with this bill is a partisan effort. I've spent the last year seeking bipartisan consensus. In February of 2009, over a year ago, with the new Obama administration freshly sworn in, I insisted, Mr. President, from the very beginning, that Senator Shelby's staff be included in meetings with the White House and the Treasury Department on all financial matters. When I had the opportunity to take over the chairmanship of the Health Committee, the committee charged with the responsibility of writing the health care legislation, I chose to stay as chairman of the Banking Committee, in no small part because I received commitments from Senator Shelby and others that we would work together on this legislation of financial reform. When I introduced a discussion draft of this proposal back months ago, Senator Shelby indicated that we had bipartisan consensus, rather, on at least 70% of the bill back in November. And to get closer to a full agreement, I created 4 bipartisan working groups almost 6 months ago, Mr. President, each of which was charged with achieving real and meaningful progress in various sections of the bill. And even when Senator Shelby and I found areas where we could not agree, I continued to reach out to other members of the committee, including my friend and colleague from Tennessee, Senator Corker, and others, spending weeks working to trying to achieve a consensus on financial reform. It's not even a slight exaggeration, Mr. President, to say that we spent countless hours, phone calls, meetings, emails, discussion graphs, day after day, week after week, month after month, to try and get closer and closer to a proposal here that our colleagues could support. And you can see the results. The bill we marked up in our committee last month is a much-changed proposal. The proposal I made in November with a discussion draft to reflect the work that had gone on over those many weeks and months, and the ideas brought to the table by colleagues of both parties, from members of that committee and others. My friends on the other side of the aisle may not like every line in the bill that is now will be before us in a few short days, but at the very least, let's not pretend that the bipartisan work that produced this legislation didn't happen. It did happen. That's a disservice to yourselves, those who make these allegations, and your good staff who worked hard over these many, many weeks with my Democratic staff and others to produce this product. If members want to vote against the bill, they can do that. That's their right to do so. And they can go on record in support of leaving your constituents vulnerable to more lost jobs, more foreclosures, more shuttered small businesses, more wiped out retirement accounts. Now, that's up to each individual member to decide for themselves that that's the vote they want to cast when it comes to this. But the outcome of this debate will mark my words, affect the economic security of ordinary Americans. And they deserve to know the truth of what's happened. So today I want to talk about bailouts. Nobody likes them, Mr. President. And under our proposal, they will never happen again. As the President said in his State of the Union address, bailing out some of the large banks whose own mismanagement caused the crisis was about as popular as a root canal, to quote him exactly. That, of course, happened under the previous administration, I should note. But serious legislators of both parties realized that we had no choice. Our system was so broken that these companies had become too big to fail. If we did nothing else, our entire economy would collapse, we were told. You would think that if you wanted to avoid being backed into the corner again, if you wanted to avoid more bailouts, you would oppose efforts to protect the status quo. But Wall Street's special interest needed a way to defend the broken system. After all, for many of them, the kind of mismanagement that cost us millions of jobs is the way they pad their profits and pay their lobbyists. And so they turned to Frank Luntz, their political strategist. Now, let me tell you what Mr. Luntz came up with, and I quote from Mr. Luntz's memo that was leaked, unfortunately, for Mr. Luntz and others. But let me quote the partisan memo. The single best way to kill this legislation is to link it to the big bank bailout, end of quote. No matter what is proposed, no matter what's in the bill, no matter what the protections it includes, call it a bailout. It's a naked political strategy, Mr. President, and if it succeeds, and this legislation goes down, and another crisis sinks the American economy, then the next recession and all the damage that it'll bring to the working families of this country will have happened for the sake of that false talking point that Mr. Luntz has been proposing. Now, I don't expect Frank Luntz to care about the truth of what we're engaged in here. That's not his job. He's a political strategist. He's to provide political talking points to people when you want to defeat something. I don't expect the bank lobbyists and the special interests to care about the truth. They don't seem to worry about that. But the American people deserve better from us in this chamber. And that's why I've been so dismayed over these last 24 hours to hear members of this body repeat the utter falsehoods concocted by special interests whose jobs and pensions are plenty secure, thank you very much, that this bill would lead to more bailouts. Frank Luntz suggested that allies of the big banks say, and I quote him, if there's one thing we can all agree on, It's that the bad decisions and harmful policies by Washington bureaucrats that in many ways led to the economic crash must never be repeated, end of quote. The minority leader speaking yesterday, let me quote him, "If there's one thing Americans agree on when it comes to the financial reform, it's this: never again should taxpayers be expected to bail out Wall Street from its own mistakes. We cannot allow endless taxpayer-funded bailouts for big Wall Street banks. And that's why we must not pass financial reform bill that's about to hit the floor," end of quote. Remember what Frank Luntz said, quote, "The single best way to kill any legislation is to link it to the big bank bailout," end of quote. Mr. President, it's straight from the Wall Street special interest talking points. That's what they're determined to do, defeat this bill by suggesting somehow that there's a bailout provision in this bill. Nothing could be further from the truth. The bill, as drafted, ends bailouts. Nothing could be more clear in the legislation. And let me tell you how we do it. First, for the very first time, Mr. President, our nation will have someone with the job of monitoring the risks to the financial system and sounding the alarms before those risks can take down the entire system, as it almost did. And the bill imposes tough standards on Wall Street firms that create those risks. Our bill establishes a financial stability oversight council to monitor risks and requires the Federal Reserve to write strict rules, including stronger requirements, including capital, leverage, liquidity, and risk management on the largest financial companies, making it hard for them to get too large and limiting the risk they represent. Cracking down on the biggest players is critical to ending bailouts. And if a Wall Street firm does become too large or too complex and poses a grave threat to our financial stability, the Federal Reserve has the power to restrict its risky activities, restrict its growth, and, Mr. President, even to break up those institutions. Let me repeat that. If a Wall Street firm becomes too large or too complex, the Federal Reserve has the power under our bill to prohibit those activities, including even breaking up those institutions. Additionally, our bill extends oversight to dangerous non-bank financial companies like AIG that could pose a risk to our financial stability, as it did. And it prohibits banks and other financial institutions that own banks from engaging in proprietary trading, making risky bets with money that doesn't even belong to them. Second, our bill eliminates the Federal Reserve's ability to prop up individual institutions using what is called the 13(3) authority, another way to stop banks from thinking that they could be bailed out if, in fact, they engage in activities that cause them to begin to fail. The Fed's leading authority is strictly restricted, not expanded, as some have claimed. Third, Mr. President, our bill sets up predictable, orderly, and safe processes for shutting down dangerous Wall Street firms that fail without endangering the entire economy. No financial firm will ever again be too big to fail. Quite the opposite here. We insist upon it that the provisions be in place so they can never once again make that claim that they are too big to fail. Large, complex financial companies will be required to submit plans for their own shutdown. We call them living wills if the company goes under. Companies that fail to produce a realistic plan will be hit with tougher capital requirements, restricted in how much they can grow, and even could be broken up. Most large financial companies would be resolved through normal bankruptcy processes. That is the presumption in our bill, receivership. But where bankruptcy is not an option, the bill creates a mechanism for the FDIC to unwind those companies. The management will be fired, shareholders will be wiped out, and creditors will take their losses. And middle-income families on Main Street won't have to pay a penny. The largest Wall Street firms would have to put up the money, $50 billion in our bill, to fund the cost of liquidating their financial firms. And any shortfall be made up by the largest and riskiest financial firms. Why should the American taxpayer have to pay for unwinding these companies? They should put up the money themselves so that they're at risk of failing. Let them pay for that unwinding that goes on. Don't charge it to the American taxpayer to do it. And our bill includes those provisions. Now, Wall Street doesn't, and they're plenty content to let taxpayers continue to pay the price for industry mistakes. But let me be clear, Mr. President. Despite what their apologists may claim, these funds can only be used by the FDIC and only used to liquidate the failed company, not prop them up. To review, Mr. President, our bill imposes tougher standards on large, risky Wall Street firms. It eliminates the federal government's capacity to bail out individual companies, and it requires that financial firms write their own shutdown plans and even pay for the liquidation process if it is needed. Here's what I have to say to Wall Street, Mr. President. If you have a better idea, let's hear it. If you have other ideas, let's debate them. But if all you have up here is a black and white talking points that bear no relation to reality, don't reflect the efforts that have gone on for months to try and produce a proposal here that might attract broad support in this chamber, here where serious senators have done serious work, and nothing but write it off somehow by quoting a political strategist's talking points, then all of this effort, I wonder what's been made for over these many, many months. Senator Shelby, I'm told by my staff, and I have dealt with some 42 pieces of legislation in 39 months. I'm told around 37 of them become the law of the land, because I've made it a determination as chairman to work together wherever possible to achieve common points. And so my history is to try and achieve that wherever possible. And I take great offense at the suggestion it has been otherwise. The outcome of this debate affects the economic security of every single American and every single American family. And what we've been through, we should never have to go through again. And our bill takes steps to try and achieve that. Not that we're going to stop every economic crisis in the future. That would be a foolish suggestion. What we have done is to fill in the gaps that allow this crisis to occur, provide tools for the coming generation so they can address a future economic crisis, and still allow for the vitality of a financial services sector to produce jobs, create wealth, allow credit to flow and capital to form so that our economy can prosper once again. Trying to achieve those three goals has been the hallmark of what I've tried to put together with this bill, along with my colleagues on the Banking Committee. I believe we've done a good job in achieving that. I'll be the last one to claim perfection. And if people have other ideas on how to do this, that's what a process like this is for. But to castigate it and label it is nothing more than a partisan debate and suggest that somehow what we've done here is to perpetuate too big to fail is just poppycock. And it's unfortunate that at this hour in this debate, that's all we can hear from on the other side. Now, the door is still open, Mr. President. We're not yet on the floor debating this bill. And I'll be continuing to have meetings with Senator Shelby and others. But my patience is running out. My patience is running out. I've extended the hand. I've written provisions in this bill to accommodate various interests. But I'm not going to continue doing this if all I'm getting from the other side is a suggestion somehow that this is a partisan effort. We've been through it over and over again on this floor for the last 2 years, or year and a half, rather. And I think the American people are sick of it. They want to see us work together to achieve results that benefit them, not some political party, not some narrow ideology, and certainly not the narrow interests on Wall Street. And so in the coming days, I'll give you a bill I think you can vote for and stand up and proudly support, and more importantly, one that we can go and say to the American people, we'll not have to go through what we've been through for the last 2 years. And never again should another generation face the kind of risks we did because of the gaps that existed in our financial regulatory structure. With that, Mr. President, I yield the floor. Consent, by the way. I've been quoting from Frank Luntz's memo. I ask consent that the entire memo be put in the record. I want the public to read this document that gets quoted by the other side so they know what we're really up against here with political chicanery.
Without objection.
Thank you, Mr. President.